My name is Krista Carter, and I am the Vice President of the West Orange Chamber of Commerce. And it is my pleasure to be here with you today, and I'm glad that you guys could join us. The Chamber team has been working hard in bringing opportunities to our members in this crazy time that we're in right now. It is my pleasure to highlight some of our members. I would like to thank our community trustees and our supporting trustees for there with us through everything and being the financial backbone of the West Orange Chamber. I am going to take us out the screen share real fast. And I'm going to mute everybody because I've got some feedback in the background here. Just one second. See if we can get everybody quiet. All right. Okay. So I think I am going to now introduce the president of the West Orange Chamber, Stina Duva. So Stina, why don't you say a few words?
Okay. Thank you, Krista. I'm actually at home this morning, heading into the office a little bit later, but I want to thank my team for learning and mastering the world of virtual meetings. 2 months ago, we would have never imagined we'd be doing this, but I don't think anyone can imagine the situation we're in. So I do, first of all, want to thank Adam for being with us today. We've spoken, and I know he's got a wealth of information, which is why we wanted him here today. As I was reading more and more in articles about this PPP, it got so confusing and unbelievably confusing and not clear, dirtier than mud, if that's even a possibility. And we wanted to make sure that people understood that if they are fortunate, and I don't even know if fortunate's a good word to get the PPP, that they know how, in fact, to turn it into a grant, a forgivable grant. So there's a lot of ins and outs of that. So I think Adam, spends most waking, minute of his day learning more about, all of these loans and the PPP for our businesses. So I want to thank Adam foremost for that. I also want to thank our community trustee, Clinton Pownell, who is on the call. I also saw that Annie Ahmed is on the call as well with Computer Business Consultants. They're located in Oakland. Prior to COVID-19, I slept very well at night because I didn't worry about the chamber's computers. I didn't worry about them getting hacked. I didn't worry about how many junk emails I was going to have in the morning when I woke up, because they have really set us up for the past, just I think over 2+ years with all of our IT needs. So I thank Clinton and his entire team for doing the work that no one at the chamber had not even the inclination to want to do it, let alone the expertise. So thank you so much to Clinton. He can help set up with remote workstations, but just a wealth of knowledge on the IT field. So thank you to Clinton Pownell. And Krista, was I supposed to say anything else but to thank you to Adam and to Clinton?
No, I think you
that I hope feel greatly appreciated, because we do appreciate both of you very much for what you're sharing with us today.
Thank you, Stina. And I think it's a little funny that you talk about you not having sleepless nights because of the IT, but Stina doesn't deal with the IT at the chamber. I deal with the IT at the chamber.
But I would lose sleep if you were losing sleep.
Right.
That's what it was all about, Krista.
But seriously, I have to say that I worked with a bunch of different computer people in my lifetime, and I do not miss a wink of sleep because of my computers now, because I know every morning that everything is going to be fine with our computers. And if it's not, there's a plan B and a plan C and a plan D, and I know that Computer Business Consultants will take care of it. So thank you, Clinton. Thank you to your team. And then now it is my pleasure to introduce our guest speaker today, Adam Markowitz. Adam Markowitz is the partner and vice president of Howard L. Markowitz, PA. And there is a team of him and his father, Howard and Adam, and they have served clients with income tax, payroll, bookkeeping, and accounting needs while being people-centric and always wanting to connect one-on-one with their clients. Now, Adam, I have been working with many different chamber members and getting all of these calls set up with the spotlight speakers and the call listening learns and such. And Monty, who did our first spotlight speaker, he just talked about how great you were. He raved about how you knew all the answers, and he just thought you were one of the best people to work with. So we knew that we had to eventually get Adam up here and help us talk about PPP. So Without further ado, it is my pleasure to introduce Adam Markowitz. Oh, but before we get started, Adam, I always forget. If you want to ask a question during this presentation, we have a chat box on the right-hand side of your screen. That is where you're going to type in your questions. And at that point in time, when it comes time for question and answers, Carrie and Kelly are going to present those questions to Adam, and he's going to answer them live for us. So if you don't see the chat box on the right-hand side, move your cursor on the bottom of the screen, and then you're going to see a little bubble pop up that has like a little conversation picture in it. You click that, and that is going to be your text box. So I'm sorry. Now, without further ado, Adam Markowitz.
Thank you so much, Krista and Stina, and obviously thank you to the West Orange Chamber for taking care of this today, and I'm hoping to get a lot of great information out to people. Let me see here. Okay, hopefully everybody sees a PowerPoint presentation now with a bunch of little piggies on it. Fantastic. Okay, so today, like I said, we're going to talk about the Paycheck Protection Program. And I have, kind of cleverly subtitled this, What You Need to Know, What We Don't Know, and What We Need to Know that you don't know at this point. Again, my name is Adam Markowitz. I am an enrolled agent and the vice president and co-owner of Howard L. Markowitz, PA CPA. We have 3 different office locations, most notably here in the West Orange area. I work out of my house in Windermere, but I also have offices in Leesburg and in Castleberry. Just a general disclaimer that I need to put out there just to cover my own license. The material, obviously, that we're talking about pertains to the Paycheck Protection Program, as well as the CARES Act that was passed in 2020. Don't use this for any purpose aside from, what it's intended for. Don't try to avoid taxes or anything like that. If you do have any questions as it pertains to this, you should seek your own tax and legal advisors. I do want to throw in here as well that, as Stina mentioned, for the last 7 weeks or so, I have literally done nothing but write about, read about, talk about, and fill out applications for the PPP and all of the other loans that are out there and the information as it pertains to the CARES Act. And I have been trying to help as many people in the community as I can. So, with that being said, I have extended myself to the chamber and to anyone for as long as I am upright and for as long as there is money left in this program. If you need any help whatsoever with this, all of my information was on the slide prior, and I know we will be sending out this slide deck at the end of this. Please feel free to contact me. If I can't answer your question today because we run out of time or because it's something very specific to your issue, please, again, do not hesitate. Reach out to me. That's what I am here for, and I am trying to help as many people in this community as I can on an absolutely complimentary basis. So please feel free to take advantage of that. All right, so we're going to cut this today into a couple parts, and I will take some questions in the middle if need be. And the first part that I'm going to zip through in about 20 slides here and hopefully about 15 or so minutes is the basis of what the PPP is. And I have very kind of cleverly called this the program designed for, air quotes, small businesses. And as we will see that, this was not necessarily with mom and pop in mind as much as it was some of the bigger small businesses, but everyone who has under 500 employees is going to be eligible for this. All right, so let me see if I can move this out of the way. All right. Here. All right, so the sole purpose of the PPP was to keep people off of unemployment. It is called the Paycheck Protection Program for a reason, because we are supposed to be protecting payroll. So the loan was calculated at employers can get 2.5 times their quote monthly payroll costs, which is designed to keep people who would otherwise be on unemployment employed for a period of 8 weeks. For those of you who may know about the unemployment system here in the state of Florida, we have successfully paid out on, as of I believe it was April the 26th, approximately 46% of our applicants. That means there are 54% of people who have applied for unemployment who have yet to collect. And some of these applications go back to March, and some of them go back to the beginning of March, as a matter of fact. So that was the purpose of the PPP, was to fill the gap that unemployment was not able to fill on a state-by-state level. Next slide. Okay, so what are payroll costs? Payroll costs are gross pay up to $100,000 of annual pay per employee, plus state unemployment insurance, health insurance benefits, and retirement benefits. Now, keep in mind that the average PPP loan is for the equivalent of approximately 10.83 weeks of payroll. 10 divided by 52, 10 weeks in a year, 10 weeks that are covered over a 12-month period, 52-week period. But the PPP only covers 8 weeks of actual payroll pay. The other 2.83 weeks of payroll costs are designed to be used for rent, utilities, and interest expenses, so long as all of those things were in place prior to February the 15th. Now, this is important because the PPP is not, again, just designed to protect payroll. That's its primary role. But it's also designed to keep small businesses going with what their biggest expenses are to cover them for a period of a couple of months. So as a quick example to calculate payroll costs here, if company A has an annual payroll of $520,000, it has $43,000 per month in in payroll costs. Multiply that by 2.5 months, you have a $108,000 PPP loan. With an average weekly payroll of $10,000 times 8 weeks, that means we have $80,000 in payroll costs that would be forgivable under the PPP, but the remaining $28,000 in change would be able to be used for rent, etc. At least that's the way the program is designed. Of course, the program was also designed to be given out on a first come, first served basis. But as we may see here in a couple slides, there was definitely some favoritism shown by specifically, and I put in parentheses here, the big banks, as to who would actually be able to get the PPP from the first round of funding. I will throw in here for anyone who has watched me do a PowerPoint presentation in the past, I normally have very hidden humor in here, and today I picked the pigs on purpose, not just the little piggy banks, but as we see, there was some little piggish activity that went on with the first round of PPP here. So, some stats from round one of PPP. Originally, the CARES Act allocated $349 billion for this program to small businesses. Now, there are 30.4 million registered small businesses in the United States. And if every single last one of them went to go get a PPP, the average PPP loan would be for approximately $11,200. In actuality, there were 1.6 million people who were funded for PPP in round one of this, and the average loan was $206,000. Obviously, there is a massive gap that needs to be filled here for all of the employers who were not able to get PPP in round one. So what Congress did as of April the 24th was they passed a second tranche of funding here for PPP, another $310 billion to get to a total of $659 billion in totality for the program. As I mentioned before, a little over 1.6 million businesses were able to get PPP in the first round. That's 5.4% of all small businesses. And here in Florida, we were below that mean. Only 3.5% of all of our small businesses that were eligible for PPP actually received it. By our best math and our best guess here in the tax community, to fully fund PPP, we would have needed approximately $1.5 trillion in funding. So with the funding that we had originally and the funding we have now, that's only approximately 44% of the funding that could possibly be needed for PPP, which is why there is such a mad rush on right now to try to get all of those dollars, because the reality is more businesses than not are not going to be funded by PPP with the $659 billion that has been allocated. Okay, so the SBA put out a very handy guide after the first round of PPP that showed the top 15 lenders by dollars given out in the PPP program, how many loans they did and what their average loan size was. And what we came to find out is that lender number one was Chase, lender number two was Truist, which is SunTrust and BB&T, merging bank that's about to come together here in the next few months. And by our best estimation, the third lender here was Bank of America. They have not confirmed that, but they have also not denied that. Now, with these three banks, which represent three of the four biggest banks in the United States, their average PPP loan were for Chase $515,000, Truist $321,000, and what we assume was Bank of America $456,000. What does that tell you? The average PPP was $206,000, and these banks were only giving out PPPs that averaged double that in size. As a result, many of the smaller applicants for PPPs were left out in the cold, while Chase and Truist and others were taking care of their bigger PPP clients. Now, I don't want to say that like it's necessarily an awful thing, because theoretically, the more money that is handed out, the more payroll we will be able to protect. Theoretically, the first round of PPP protected over 15 million jobs. Now, we don't have the stats as to how many jobs were actually saved when you look at some of the people who were able to get this PPP money in the first go around. But what we clearly see here is the mom and pops did not do so well on the first go around. And to give you some disclosure about my clients, I have 43 applicants that I have been responsible for through the PPP program. Exactly one of them has an application or had an application for more than $300,000 for PPP, and the majority of the others were under $50,000. Our best guess is that under 10% of all loans of less than $50,000 were actually funded in the first go around, and we are guessing that less than 30% of those will actually be funded when push comes to shove with the second wave of PPP. I mentioned some companies that you may have seen in the news that got large PPP amounts. I've just listed some of them here, but I have a link at the bottom of the screen that has a whole host more of them. Ruth Chris Steakhouse was in the news, Potbelly, Shake Shack were all in the news for being, quote, small businesses that receive these PPP loans. The most interesting one that I had to add yesterday to this list was the Los Angeles Lakers, a sports franchise obviously worth several billions of dollars. And the Buss family decided that they were eligible for PPP, and they went and got a $4.6 million loan. I will mention that most of these companies did give this money back or have intent to give the money back, but still, this is what we were up against. As small businesses, the mass majority, if not the entirety of whom are on this call here, none of us, or very few of us, needed $10 million from PPP. And the number that aggravated the mass majority of the true small mom and pop type businesses is that publicly traded companies took what we know of right now as $855 million of PPP money, and we expect that number to be well over $2 billion when we're done seeing all the Ks and Qs out of the first quarter reporting of the publicly traded companies. So again, round two of PPP funding here. Congress allocated another $310 billion to the program, and to tell you how efficiently this went yesterday, round two opened yesterday at 10:30 in the morning. By 10:33 in the morning, the system crashed. We understand that there were approximately 100,000 applications that were able to be processed. We know there are millions upon millions of them out there that still need to go through the SBA for funding. We don't know when this is all going to be done, but our best guess is that it's going to take at least 8 to 9 days for E-Tran to allocate, SBA, to allocate all of these funds for round two. It was widely expected that round two of PPP funding would be fully allocated within minutes, if not seconds, had E-Tran, the SBA's processing system, not crashed. This time around, the allocation was a little bit different. In the first tranche of $349 billion of money, it was basically a free-for-all. Anyone who could apply could get in, and everyone was drawing from the same pot. This time around, community banks were specifically taken care of because they did such a great job the first go-around. Approximately 40% of the PPPs were done by community banks and banks with less than $50 billion worth of assets. So those banks have a specific pot of money which they are drawing from this time, $60 billion in fact. $10 billion of that is reserved for banks with assets of less than $10 billion. And what I will show you here in another screen or two is a list of all of the community banks that are members of the West Orange Chamber that may be able to draw from those funds. Everyone else, all of the big banks, your Chase, Truist, Bank of America, etc., are drawing from $250 billion pot. But most notably, no individual bank can write more than $65.9 billion of these loans to try to give a shot to as many people as possible. Now, the timeline here that the SBA goes through from the point that you make your application to the point that you are actually funded. This is something I have been given numerous requests for to explain this to my clients and to people that I've met on social media. If you are on this call, I imagine that you have at least made an application for the PPP. The banks request application data that includes 941 signatures on forms, etc. And every bank did this a little bit differently. All of that information then went to bank underwriting. That was for an indeterminate amount of time that your loan stayed in underwriting. And when it was finished with underwriting, it was shipped off to the SBA. Into the SBA, it goes into this one computer system that is trying to process millions of applications and is crashing regularly. And ultimately, what will happen is these loans will either be accepted or rejected. If they are accepted, they will be assigned what is called an ETRAN number. That number goes back to your bank. The bank prepares a promissory note and all of the final paperwork for funding. And then finally, you are funded. The process from when you get your approval from SBA to the point that you are funded is supposed to be 10 days. But to give you an example, I had a client yesterday who got their ETRAN number from the first go around of PPP money. That money closed up on April the 16th, and yesterday was April the 27th. That's 11 days if you're keeping count. So what we have heard from banks is that it could take as much as 4 weeks from the point that your loan is accepted to the point that you get funded. That's not to even speak of all of the time that it's going to take to submit your application to the bank and get it through underwriting. What I am telling my clients for this second go around of PPP is do not be shocked even if you get an ETRAN number over the course of the next, let's say, week or so, if you don't have your money before Memorial Day. These funds are going to take into June before they are ultimately released for many, many people out there. All right, so help me. I'm not funded yet. Round one of funding, as I have mentioned, is not necessarily complete yet. Our best guess is that approximately somewhere between 100 and 150 billion dollars of PPP has actually hit people's banks. So we still have $200 billion out there that has not gotten to the banks or to the employers yet from round one. So what do you do if you have not gotten any confirmation yet from your lender? Call them. Ask them if your loan was submitted to ETRAN. I will tell you, if you are banking at a big bank, your big bank has no idea if your loan was submitted to ETRAN. If not, if the bank does not have the answer to that question, ask them when it will be submitted to ETRAN. And if they cannot give you an answer to that, just assume you are not getting funded. Krista, I did see a question pop up real quick that I believe had something to do with what will happen if this goes into June. Can you read that question for me?
Yeah, just give me 1 second. Sorry. My big question is to determine which components of payroll are forgivable. I don't think that's the one you're looking for.
No, it was one that just popped up real quick. If whoever asked that question wants to type that in one more time, I will see it pop up real fast. Okay. I still don't see it, but let me, okay. Letter from the bank that you're waiting on funding. Is your application good? Theoretically, I'll get into that in just a second. Okay, here we go. Will they extend the June 30th deadline so that employers that get a full 8 weeks? We think so. We're not totally sure of that. And right now, the answer to that is probably. There is definitely the ability in there for the Treasury and the SBA to extend that period of time. So theoretically, if you get funded at some point late in May or early in June, your 8-week window should continue beyond June 30th. But again, that's not something that we know. As we go on in this presentation, you're going to hear the most popular words you're going to hear, we don't know yet. I'm probably going to mention that 40 times or so between now and the end of this. All right, let me go on. So if you are still seeking funding, I encourage you, contact a community bank. And I believe it's my next slide that I have the names of all of our West Orange Chamber partners here. Particularly if you can find a community bank that has assets totaling less than $10 billion, see if you can get an application in through them. It is not too late at this point. It may feel that way, but it is not too late. Continue making your applications. You can also apply to fintech company, PayPal, Cabbage, Lendio, Square. There's a ton of them out there. And what we found out relatively late in round one of this process is that there is not a limit in how many applications you can make. Originally, we were told, go ahead, apply through your bank and your bank only. But what we have learned is that you can make 1 billion applications if you find 1 billion different lenders to do this through. Do not be afraid to do it. You will only get accepted by SBA one time. E-Tran, fortunately, we are hearing is sophisticated enough that if your federal ID number has multiple applications, you will only ultimately get, one bit of funding and not multiple PPPs. As I mentioned before, here's a list of all of the West Orange Chamber members who are community banks. I highly, highly encourage you to reach out to these banks to see if they can do your PPP loans, even if you do not bank with them. I do know that some of them are having trouble with that. I know Seacoast Bank specifically, I have some good contacts there, was having a hard enough time just getting through its own clients, but we may be able to get some help here and hopefully get people funded who are specifically our West Orange Chamber members through these banks. All right, round 3 of PPP funding, I believe, is going to be inevitable. Congress has not made any appetite at this point that they are willing to do a 3rd round of this, but it is widely expected that there is going to be more funding. So if you do not get funded for round 2 of PPP, do not be afraid to continue making applications. There should be more money put into this program, whether it is just a blank check, which in my opinion they should write to make sure everyone gets funded, or if they go ahead and add another 300 some odd billion dollars to the funds. I don't want to touch too much on the employee retention credit, but I do want to make mention, if you get completely shut out of PPP and you have under 100 employees especially, you may be entitled to what is called an employee retention credit instead of the PPP. And what that does is it will fund you 50% of your wages that you paid out to your employees. There's a lot of qualifying that has to be done with that. Bring that up to me specifically one-on-one later if need be, or discuss this with your accountant. All right. At that point, I know there's a bunch of questions that have gone through. Krista, are there any out there that I might be able to answer at this point as it pertains to the 1st round or 2nd round of PPP funding?
Yes, Carrie, do you want to go ahead and start with those questions? Or maybe not.
Well, Adam, we have one question that Krista already touched on. The first, how do you determine which
Kelly, can you say that one more time? You kind of cut out there.
Our first question is how to determine which components of payroll are forgivable.
Yep, we're going to get into that. That's the whole 2nd part of this.
Okay. You answered the question, can you apply more than once? Big question is forgiveness. Have we received final guidance from the SBA? Let's see.
Anything about forgiveness we're going to hopefully get into here in the next 20 minutes or so.
So here's one. If you received a letter from your bank stating that it was waiting on funding, is it still, well, you already answered that. Never mind.
Okay. Yeah, the big indicator that you will get when you are funded is when you get an E-Tran number, or what some banks are doing is they are just choosing to send promissory notes. Now, not every promissory note specifically means that you are getting funding, but every E-Tran number does. So if you just get a blank promissory note from your bank, go back to your loan officer and ask them, does this mean I have an E-Tran number? If you have an E-Tran number, you should get funded. How long that's going to take is still up in the air, but you should get funded. That is your piece of the pie, basically.
And then there's one here, right? Self-employed individuals. Does applying for PPP make you ineligible for the pandemic unemployment assistance?
Yes, that's a very good question, and I don't get into that. So it is called the Paycheck Protection Program for a reason. If you are on unemployment, you are not eligible for PPP. However, if you are on unemployment and you did apply for PPP, once you get your PPP, you need to take yourself off of unemployment as well as the rest of your staff, and then you can start counting whatever wages you pay and payroll costs you pay towards your forgivable portion.
Okay, and one more question before you move on. Yep. I have clients who used a different bank to get their funding. Is there any problem with a client taking the funds from the bank they received funding, then transferring those funds to a different bank where they hold their operating cash to pay their bills easier? The funds will be used to cover payroll and other eligible costs, but just from a different bank.
Right. Theoretically, no, but I would ask your bank that specific question. Theoretically, the way this should work is at the end, you are going to certify that you use the money for the appropriate reasons. And if you did, it should not matter what bank account that came from.
Okay, perfect.
Right?
And Adam, I have one more question for you. If we applied and have yet to get funded, if we furlough an employee with intent to hire back once funded, will we get disqualified for furloughing them?
You will not get disqualified for furloughing them so long as you bring them back once you get funded. And that's a vague answer, and you're going to get a more vague answer as this goes on. But that's what the law says. Effectively, once you get your PPP, you should be putting people back on payroll.
Perfect. All right. That's all the questions for now.
Great. How am I doing? I've got 10 o'clock. Perfect. Okay, so hopefully there are some fortunate ones on the phone here who got their PPP loan, and hopefully there are lots of others who will be getting it with this second tranche of money. So now what? Again, prepare yourself. A lot of what we are going to hear in these next 20 minutes or so is we don't know yet because we have not received final guidance. So the reason why the PPP was so popular was not just so you can get a loan from the government. The appeal in this whole thing was that the loan would be forgiven with no tax consequences and no negative effects on your credit. I do want to throw in here specific to PayPal. PayPal has been pulling credit. We don't know why PayPal has been pulling credit. It is not a part of the law. It is not supposed to be discriminatory based on your credit, but PayPal has been pulling credit. So far, that's the only company that I know of that has been doing that, but that's not to say that you won't get a pull. But if you are forgiven of this loan, there is no negative effect on your credit because you were forgiven of debt, as would normally be the case with like a credit card or anything else. All right, if you listen to the actual CARES Act, the 889-page bill that passed at the end of March, your PPP loan will be forgiven if you use 100% of the proceeds to pay for, quote, payroll costs, rent, utilities, and interest on debt payments that were accrued prior to February 15. But as we will see, what is in the CARES Act is not actually what's happening because of guidance that has been put out by the SBA and the Treasury. The real world, let's talk about some of these examples here. In the original CARES Act, it stated that the unused portion of the PPP would be converted into a loan payable over 10 years at a rate not to exceed 4%. Literally 5 hours before this program started on April the 2nd, the SBA put out guidance that said the unused portion and unforgiven portion of the PPP will convert into a loan payable over 2 years at a rate of 0.5%. And then guidance came out one day later and said, just kidding, we meant an interest rate of 1%. And this, of course, had to do with the banks because the banks don't really want these loans for 10 years and they don't really want the loans for 2 years either, certainly not at an interest rate that's this low. Another one, in the CARES Act, it specifically says that FICA, your Social Security costs as an employer, cannot be calculated as a part of your payroll costs. SBA guidance on April 2nd seemed to affirm that, but it left the door open and several of the big payroll companies and banks out there were accepting applications based off of that 7.65% in Social Security tax being a part of your payroll costs. On April 8th, the SBA came out with further guidance and said, nope, never mind, you really can't use FICA. Leased employees was a big one for the very beginning of PPP. When the PPP program opened, we had no idea if leased employees, those who use PEOs for their payroll, whether that would count as payroll costs. It didn't seem like it at the beginning, and the guidance that was put out on April 2nd seemed to reinforce that. But on April 8th, again, SBA changed its mind and says that, yes, you can use leased employees towards payroll costs. The forgiveness dates here, this is a big one that's going to come up a couple more times during this talk here. Forgiveness, as it says in the CARES Act, is supposed to be an election based off of the number of full-time employees you had either from the period of February 15 to June 30th, 2019, or January 1 to February 29th of 2020. It was supposed to be an election. Well, SBA guidance came out, and all of a sudden they changed this to the number of full-time employees you had on your payroll for February 15th of 2020. But yet on most bank applications right now, they're not even asking that question, and they're taking the number based off of your first quarter 941 for 2020. And they're just saying they'll use that number. So which number are we going to be able to use for forgiveness based on full-time employees? We don't know. Another example, in the CARES Act, it specifically states in the CARES Act that you can count the amount paid to your 1099 subcontractors as payroll costs. And the guidance that came out with the program rollout on April the 2nd affirmed that. But on April 8th, SBA guidance almost insulted everyone by basically saying, of course you can't use subcontractors as payroll costs. And the justification is correct with this. Subcontractors who are 1099 MISC individuals are able to get their own PPP, so the people who paid that money should not be able to get it. I will tell you there are plenty of early applicants who had applications out there that counted their subcontractors as payroll costs that got PPPs based on that amount that are ultimately going to have to pay that money back. All right, in short, the SBA has not given us any official guidance regarding how forgiveness is truly going to be calculated. That said, we have gotten a lot of hints along the way that may give us, some clues as to what might be included, even though it is maddening right now that we are on April the 28th, 25 days into this program, and still do not know how forgiveness is truly going to work. All right, so I've got a lot of things here that we do know and what we don't know. And what we think we know based off of PPP forgiveness. So again, the premise here is you have to rehire your staff or keep your staff employed. What we know about this, you will be docked a percentage of your forgiveness of your PPP based on the amount of employees that you have on during your 8-week period. If your bank determines that you had 10 full-time employees before and have 9 full-time employees during the covered period of your PPP loan, you will only get forgiven 90% of that loan. So if you had a $100,000 PPP and you only get 90% of the forgiveness, $90,000 of it would be forgiven, and $10,000 of it would become a 2-year loan at 1%. What we don't know, when is this 8-week period going to be calculated? In the law, it states you need to rehire your employees by the end of the covered period, which is June 30th. If you do, will they count towards your full-time employees? The CARES Act says, yes, that is the case, but will the guidance say that? We don't think so. We have a hunch that what is going to come from this is that you have to have an average of whatever your full-time employees were for the entire 8-week period. That is what we are guessing is going to happen with this. And then, the better question here may be what period of time will be used to calculate the original full-time employees? As we mentioned before, is it the full-time employees at February 15th? An average of your full-time employees from the beginning of the year, or an average of the employees from the same covered period of last year? We don't know. All right, pay your staff full wages. This seems to go without saying. When you have someone who you have hired, make sure that you are paying them what you should be paying them. If you pay your employees less than 75% of what they were making before, you will lose credit towards your PPP forgiveness. So if you had an employee that you were paying, Joe, I will get to that answer for that question that just came up. I will get there. That's a very sticky subject right now. But as an example, if you had an employee you were paying $1,000 a week to, and you pay them just $600 a week with your PPP money, you will be penalized for $150 a week of pay. Or so we think. Here's what we don't know. What is the basis for that 75%? Is it 75% of weekly wages? Do commissions count? Do bonuses count from the past? Is that 75% of the average wages for the last year or the last quarter or the last 90 days before COVID? We don't know the answers to this, and this is a very big one that employers need an answer to and need it now. But here's a scary, scary one that could come up for employers. What's the factor of that 75% anyway? If the calculation of the average monthly payroll was used for 2019, are employers responsible for paying that portion of 75%? So let's go back to our employee making $1,000 a week. That employee is theoretically on a salary of $52,000 a year. If the covered period is what we are basing this off of, employee A should be making $10,833 over a 10-week period. Does that mean that the employer has to pay 75% of that? If so, the number in this example is $8,124.75. And yeah, I know this is technically very, very confusing, and this is why we're going to make sure the slides go out for this so you can reference this. But using this employee, if it requires 75% of the $10,833 to be paid. That means we have to pay that employee more than what that employee would have been paid over the 8-week period, because over the course of 8 weeks, that employee would only make $8,000. So what happens with the other $124.75? We don't know. It might be forgiven. It might not be forgiven. We really do not know how Congress and how the SBA is going to treat this, but this is a very scary prospect for business owners if what is on this slide is what they are taking as the 75% factor. Let's see. In the final rule, that quote, final rule, interim final guidance, that was issued on April the 2nd and has literally been updated no less than 12 times, and it's probably significantly more than that. It states that 75% of the loan must be used for payroll costs. This was completely made up in the guidance. There was no reference to this in the CARES Act whatsoever. The CARES Act just said you need to use this money for the purposes they want it used for. However, the interim final guidance says that 75% of the loan at least must be used for payroll costs. The other 25% of the loan may be used for rent, utilities, and interest on debt payments that were accrued prior to 2/15. That's what we know. What we don't know, what happens if it's not used for payroll costs? There is an interpretation out there by one of the smartest individuals that I know in this field, Tony Nitti, who is wondering if you get a $100,000 PPP and you use $74,999.99 of it on payroll costs, is it possible that absolutely none of that PPP is going to be forgiven? It is entirely possible that that will be the case. So getting to that 75% threshold is going to be utterly, utterly crucial until we know what the final rule is going to say. We did receive a hint on a webinar on April 25th, and I'm sorry I could not link to this. I just cannot find the link anymore. But this was an SBA webinar that stated that they were working on a formula that they would provide that would give an apportionment of the PPP to forgiveness. But we have no idea what that looks like. For now, I am telling my clients, if you do not use 75% of this loan towards payroll costs, you may not be forgiven of a single cent of it and may have to pay the whole thing back. I hope I'm wrong, but that's what I'm advising my clients in a worst case scenario. Then the other question that's related to that, can 25% of the PPP be used for rent, utilities, interest, etc., if there are no payroll costs because everyone is on unemployment? We doubt it, but we don't know. We may be able to get 25% forgiveness on the PPP at that point. And then a big question as it pertains to unemployment. What if your employees refuse to return from work? There is a lawsuit in the state of Washington, I believe, that the employees are trying to sue their employer for bringing them back to work because they are making more money unemployed than they are making if they were employed. That's a really sticky situation right now, and there's no real good answer to that. You may actually have to hire a new staff just to get this forgiveness. This is going to be in the courts. This is going to play out in the courts. But is it going to play out in the next 8 weeks? Probably not. And what is that going to mean to your PPP forgiveness? We really don't know. So you have to hope that you can tell your employees, if you have laid them off, to come back to work for you. And knowing that in a lot of cases, it's going to be less money that they make than they would have made on unemployment. And then there's the other question tied to this. Okay, say my staff doesn't come back. Am I allowed to give myself a big fat raise? We don't know. For owners of S corporations, we think the answer to that is yes. But for sole proprietors and partnerships, we think the answer to that is no. The reason that we think an S corporation owner may get away with this is because the $15,385 for any employee can be funded and forgiven through the PPP. However, there is nothing in the guidance that, though specifically excludes owners and relatives. That doesn't mean that there won't be something that comes up in the final guidance that may prevent S corporation owners or anyone from giving themselves a salary with this. I threw this slide in today from something that came off of social media. I had a question about utilities. What we know about utilities is that that will count towards the 25% of PPP loan forgiveness. And we know that there are traditional utilities. We think electric, water, gas, etc. However, the SBA tossed in there on approximately April the 8th, I don't have the exact date that this came out, that utilities would consist of electricity, gas, water, and then I bolded the new ones, transportation, telephone, and or internet. But what does transportation mean? Does it just mean gas? Does it mean mileage, tolls, train fares, whatever the case is? And then if telephones count, do cell phones count? If they do tablets count? Do GPSs count? These are all things we just do not have a clue on right now and certainly need more guidance on. The covered period here is something you've heard me speak of a lot. What we know, your loan is going to cover an 8-week period. That seems really simple. SBA made it a little more simple to say that the 8-week period starts the day you actually get your funding. So if you get your funding on May 1st, you have 8 weeks from May 1st to use the money. However, how are we counting these expenses? Are the expenses from when they are incurred or when they are spent? So as an example, if you get your funding on May the 4th and you've already paid your May's rent, do you get to count that towards PPP? And if not, do you get to count your July rent towards PPP? Look at something like a phone bill. If you pay your phone bill in June, do you get to take the phone bill in July that was for June's service? Or is it only for what's physically paid? We really don't know. The big one that comes with the staff, obviously, if everyone is on unemployment right now and you bring them back, Friday should be payday. But Friday won't be payday because most people, their work period covers the week prior or the 2 weeks prior or whatever your payroll cycle is. Does that mean that we're only going to get 7 weeks or 3 pays, perhaps, if you're a biweekly payer, to count towards PPP instead of a full 8 weeks of pay? Boy, would that be bad if that is the case, but we don't know at this point. A few other things that we don't know that I just kind of want to run through real fast. Good, I got about 10 minutes left. This is going well. Are expenses still going to be deductible on 2020 taxes, even though they were forgiven? This is a big question in the tax community. Logic suggests yes, even if these things are forgiven to you, that you will be able to take it as a tax deduction. But the history of the tax code suggests no. So even though the SBA may come out with guidance on this, the IRS may have the final say in it, and the IRS may not have the final say on this until well after PPP is history. Self-rentals. Many businesses own their own building that they operate out of. Can those self-rental costs count as rent? In Florida, I envision the answer to that is going to be yes, so long as you are paying sales taxes on that rent. Nowhere else in the country is this an issue aside from Florida for the most part. So here we have a little bit of a leg up. But if you're not paying sales tax on your rent, the answer that I would say to that is probably not, that will not count. Owner wages, again, we covered this. Are they going to count towards PPP? They might, they should, but there are lots of hints in the tax code that suggest maybe not. And I referenced the employee retention credit here. The employee retention credit does not cover employees who are related to the owner. You can't just go hire your spouse or your sister or brother or whatever and think that they will count towards the ERTC. But will they count towards the PPP? Right now, there's nothing that says you can't do that. So if you have a staff of 5 and they are all on unemployment and they don't want to come back to work or you don't want to bring them back to work, could you theoretically hire your husband or wife and your brother, your sister, your cousin, your in-laws, and everybody else under the sun just to get this money forgiven? There's nothing in the law that says you can't, but boy, does this sound like abuse. I doubt we're going to be able to do that in the grand scheme of things, but boy, if they don't cover that loophole, that's going to be a real big problem. We've already seen that there have been a lot of unintended consequences of the PPP, and this could be a big one if they don't cover it. A little bit more about the forgiveness here. What comes first? Is it the percentage of your employees that you have, or is it the dollar amount that reduces your pay? We think the answer to that is that if you are going to get a reduction on your PPP, it's going to be the percentage of your employees first, and then dollar for dollar, everything that you paid them under the 75%. And then one last thing that I threw in here, because this is, for me, the biggest question that I have. We've talked about FMLA before. I know the Chamber's had several different seminars on this. If you have employees that are on FMLA, are they counted towards full-time employees? Remember, if they're on FMLA right now, they are only making 2/3 of their normal pay, not 75%. Does the employer have to make up the difference for them to count as a full-time employee? We don't know. Okay, so what am I advising my clients in the last couple minutes I've got here? What I'm advising them to do is keep good records of everything that is paid with the PPP money. That goes without saying. We know that every bank is going to end up handling this differently, and we don't know what any of it is going to look like yet. However, what we do know is that the banks are likely going to be the final ones making the call on this forgiveness, not the SBA, even though the SBA is going to come up with the guidance. And Steve Mnuchin just maybe an hour and a half ago was on CNBC, and I threw this quote in here at the last second. And he told CNBC, quote, "Loans over $2 million will be subject to a full review." Now, what does that mean about loans that are under $2 million? Are they not going to be subjected to a full review? Boy, is that a big hint that we may be getting a lot of rubber stamps here from banks on PPP loan forgiveness. We don't know that, but what I can definitively tell you is there is no bank on this planet that wants to be holding a 2-year loan at 1% at this point. So if the banks don't want their loan and they don't get paid until either they stamp this with forgiveness or they get paid back by their borrowers, I believe, and I am not necessarily in the majority here, but I am of the belief that banks are going to do everything they can to rubber stamp these things and to not have any excess loans on their books when at all possible. So with that, I know this was a ton of information, and I'm sure I have a glut of questions. I wish you good luck. It is going to require good luck just to get your PPP. It is going to require good luck to make sure that your entire PPP is forgiven. And again, if there are any questions, I have a few minutes here that I will be able to answer some questions, and I will stick around for as long as Krista and the chamber let me, and I have questions to answer. But otherwise, again, we will send out this slide deck, and it will have all of my contact information in it. Please feel free to reach out to me. I am very happy to do so on a complimentary basis for anyone here on this call or anyone you may know. And with that, Krista, I will turn this back over to you for any questions we may have.
All right, so there are several questions. Carrie, are you ready to start reading those off?
Yes, sorry about earlier. I was having a little bit of technical problems. Adam, the first one is going to be from Joe Barsh. If you have a full-time staff member who took the COVID-19 Leave Act, 4 hours is paid at 2/3 and 4 hours is paid at full, is this still considered full-time?
Right. That's one of the questions we just don't know. I interpret that as yes, but that is my interpretation, and we need to figure that out from SBA. There is definitely an argument to be made that as the employer, you may have to fund the other 9+%, or just under 9% of those funds to make sure that everyone gets up to the full 75%, but we don't know the answer to that at this point.
Thank you, Adam. Then we have from Dawn Gilmore. She applied through Truist and was notified yesterday that her credit was pulled by the U.S. Small Business Administration. Is that normal?
Really? Okay, the question that I would have back to that is, do you also have an EIDL application out there? Because if you also have an EIDL application out there, yes, okay, that is what they pulled the credit for. That is what SBA pulled credit. Truist is not, I can definitively tell you, Truist is not pulling credit for PPP applications.
Okay, thank you. Then we have a question. Once the PPP is funded, if self-employed, would there be no more PPP?
If you are self-employed, okay. I assume by self-employed, you mean that you're on a Schedule C, whoever's asking that question. What the SBA has come out with guidance that actually was pretty clear is that approximately 80% of your loan will be forgiven and approximately 20% of your loan is going to have to be paid back unless you have other expenses that could be attributed to it. But in most cases, many of the self-employed just work out of their house, thus they are not considered having rent expenses or utility expenses. So at that point, the self-employed are likely looking at 80% forgiveness, 20% payback.
Thank you.
Okay, so do you see any more, Carrie?
Oh, I see from Joe Barsh.
I think we're going to let Joe go offline with Adam on that, because that's pretty detailed.
Oh, we have this. Thank you.
I'll be able to explain that to you, but give me a call on that.
Yeah, we'll put you guys in touch with one another for sure.
That's all we have.
Yeah, I would say that this has been clear as mud.
That's a good way of putting it.
I know that as you've been presenting, I've been getting texts from different people, and I know that Lynetta Tipton-Steed, who serves on our board of directors, she's with Fifth Third Bank, and she was commenting that she had heard that bonuses don't count; it's only based on salary. Do you know? Can you know any more about that, or any more thoughts?
Mighty interesting. That is definitely one of the interpretations, but where this comes into, again, the clear as mud part is what happens when you have employees who are solely based off of commission. or based off of the greater of commissioner hours. We just don't know. I suspect, specifically for small employers, remember that every employee is capped at $100,000 per year, which means you can't give anybody more than $15,800 whatever dollars that was, that I had on one of those earlier slides. I have a hunch that what they are going to say is so long as you stay under that number, they're not going to care, because effectively that's a rounding error when you're talking about $659 billion that's gone out in this program. But that is definitely an interpretation. That bonus doesn't count, that we have seen and may end up being the final rule in this.
Awesome. Okay, so we do want to say that this slide deck is going to go out to all of our participants, correct, Carrie and Kelly?
Yes.
Awesome. And then we'll also list all of the chamber member banks, so you can see a list of everybody that is a bank within the West Orange Chamber. Adam, like I said, awesome presentation. There's a lot. I talk
so
about
much. Yes, I know.
I talk about the computers keeping me up late at night. This is a whole nother world of up late at night. So I appreciate that. We will send out the deck. It probably will go out tomorrow, and we'll also have the recording set up for you as well. So with that, I also want to thank our computer business consultants for sponsoring today. I want to thank the chamber staff for being right there and ready to help us. Thank you for you guys participating. Remember, we have all kinds of events happening. We have Celebrating Extraordinary Women on Thursday night or Thursday afternoon, and we have a Lead and Feed coming up in May 7th. So go to wochamber.com to find all of those events. You can also find all of our COVID-19 resources on wochamber.com as well. And Adam, once again, thank you very much. I'm glad I don't have to do this all the time. Thank you for handling it for us.
Thank you so much.
Thank you, Adam. I'm trying to listen to the work group meeting as well as this, so I'm not doing well at multitasking, but thank you so much for all the information. I know it's a lot to digest and it seems to be ever changing.
Thank you,
So
Stina.
thank you.
All right. Thank you guys very much, and we will see you soon. Have a great day. Wash your hands and stay safe.